The demand for massive, always-on power from AI data centers has fundamentally transformed the energy landscape. What was once considered a niche technology, small modular reactors and microreactors, has now emerged as a leading solution to power the artificial intelligence revolution. Today, we'll explore how this transformation is creating unprecedented investment opportunities in the nuclear sector. Executive summary. We're facing a perfect storm in energy markets. The exponential growth of artificial intelligence requires computing power on a scale we've never seen before, and this computing power demands massive, reliable electricity. Traditional energy sources simply can't keep up with this demand, particularly the 24/7 baseload power that AI data centers require. This has created a multi-trillion-dollar market opportunity for small nuclear technology. The pure-play SMR developers are positioned to capture this opportunity, and we're already seeing extraordinary market responses as investors recognize the potential. Key company overview. Let's examine the companies leading this revolution. As of early October 2025, 3 companies stand out with remarkable performance. Oklo leads the pack with a staggering 500% year-to-date return, driven by their microreactor technology and massive 14-gigawatt order backlog. NuScale Power, while more modest in returns at 124%, brings crucial regulatory credibility as the first company with NRC design approval. Lightbridge completes the picture with 348% returns as an enabler company, providing advanced nuclear fuel technology. What's particularly notable is that these aren't small companies anymore. Oklo boasts a $19 billion market cap, demonstrating the scale of investor interest in the sector. Oklo Inc. Deep Dive. Oklo represents the most exciting and speculative opportunity in the small nuclear space. Their Aurora fast fission microreactor is specifically designed for the AI era. These compact reactors, generating up to 75 megawatts, can operate for years without refueling, making them perfect for dedicated data center power. Oklo's power as a service model is particularly clever. They own and operate the reactors, making adoption seamless for tech companies. The numbers tell the story. 14 gigawatts of contracted orders with 12 gigawatts specifically for data center operators switch. However, investors must understand the risks. Oklo remains pre-revenue with their first commercial deployment not expected until 2027 or 2028. The current valuation reflects enormous future growth expectations, and any execution missteps could be punishing. NuScale Power Deep Dive. NuScale brings something crucial to the table that others lack: regulatory certainty. As the first company to receive NRC design approval for their small modular reactor, they've cleared the highest hurdle in the nuclear industry. Their light water reactor technology is more conventional than Oklo's approach, which actually works to their advantage in regulatory timelines. The Voyager plants, composed of multiple 77-megawatt modules, offer scalability that appeals to both utilities and large tech companies. Their recent partnership for deployment across 7 states represents the largest SMR deployment in U.S. history. However, investors should note the valuation concerns. With a price-to-sales ratio exceeding 330, much future success is already priced into the stock. Lightbridge Deep Dive. Lightbridge offers a different type of exposure to the nuclear renaissance. Rather than building reactors, they're focused on making all nuclear technology better through advanced fuel designs. Their metallic fuel technology can increase power output in existing reactors by up to 30% while enhancing safety margins. This positions them as an enabler rather than a direct competitor. They benefit regardless of which reactor technology wins in the marketplace. The 348% return reflects investor recognition that the entire nuclear ecosystem will grow together. Lightbridge represents a potentially lower risk way to participate in the nuclear revival, though still with substantial volatility given their small market cap and early commercial stage. The broader context. To understand why these companies are performing so exceptionally, we need to examine the broader context of what's being called the AI energy crisis. Tech giants like Microsoft, Amazon, and Google are facing an existential challenge. Their AI ambitions are colliding with physical reality. Training advanced AI models requires unprecedented computing power, and that means unprecedented electricity demand. A single large AI data center can consume as much power as a medium-sized city. The problem with renewables, solar and wind, is their intermittency. AI workloads can't pause when the sun sets or the wind stops. This creates an insatiable demand for reliable, carbon-free baseload power that only nuclear can provide at scale. Meanwhile, regulatory tailwinds are accelerating. The ADVANCE Act has streamlined nuclear regulations, and we're seeing bipartisan political support recognizing both the climate and national security implications of reliable energy. Investment considerations. This brings us to the crucial investment considerations. The growth potential here is enormous. We're looking at a complete transformation of how we power the digital economy. First mover advantages could be decisive, and the regulatory support is stronger than at any time since the early nuclear era. However, the risks are equally substantial. These are pre-revenue companies burning significant cash. Regulatory hurdles, while improving, remain substantial. Technology execution risk is very real. Building nuclear reactors is arguably the most complex engineering challenge humanity undertakes, and the valuations already price in tremendous success, leaving little room for disappointment. For risk-tolerant investors, direct exposure to the pure-play companies offers the highest potential returns. For more conservative investors, broader nuclear ETFs or established nuclear companies with SMR divisions might be more appropriate. Conclusion. In conclusion, we're witnessing the emergence of a transformative investment thesis. The AI revolution is creating energy demands that existing infrastructure cannot meet, and small modular reactors represent the most viable solution. The companies we've discussed, Oklo, NuScale, and Lightbridge, each offer different exposure to this trend with varying risk profiles. What's clear is that the AI energy crisis is structural, not cyclical, and the companies that can deliver reliable, carbon-free power will be incredibly valuable. The key for investors will be monitoring regulatory progress, commercial deployment milestones, and additional partnerships with tech giants. The AI revolution needs power, and small nuclear reactors are uniquely positioned to deliver it. Early investment in this space offers extraordinary potential, but must be balanced against the substantial risks inherent in developing groundbreaking nuclear technology.